What is going on? We just finished the most amazing webinar, not about how to make more money, but how to save money. I was with Tommy with PCS. We talked about estate planning, tax planning, entity structures, and business credit. If you guys love the webinar and stay till the end, please make sure to subscribe, like. We have this every single month. You got to check it out now. Let's let everybody jump on, but this is actually a super exciting webinar. I'm here with Tommy Thornburgh.
Got it.
Yeah, let's just let everybody jump on. Do you want to give like a small introduction to yourself real quick? What you're about, what you've been doing?
Absolutely. Thanks for having us out. Blue Shirt Day.
Exactly.
My name's Tommy Thornburgh. I'm the president of Prime Corporate Services. So Prime Corporate, we've been in business for 10 years, and we've helped over 100,000 entrepreneurs structure their business. So pretty humbling, awesome number. Primarily focus on making sure that startup entrepreneurs and as they grow are structured properly. Three main areas: privacy and protection, tax benefits, showing yourself as a legitimate business.
Yeah.
And then obviously some business credit, which we'll talk about.
Yeah,
as well.
we'll go into that, but tell the audience about you. Who are you? Like, we'll get into PCS, but let them know, like, what's your journey?
Sure. Yeah. So I've been self-employed since I was 18 years old. So my first self-employment job, I went out to North Carolina from Utah. We're headquartered in Salt Lake City, Utah. And 18, went out to North Carolina, started knocking doors selling pest control.
Nice.
And made a decent amount of money for being 18 years old, but got home and got obliterated with taxes.
Same.
And no one knew what to do. No one that I could turn to understood how to write off expenses, how to keep as much money in your corner as possible. So I became obsessed with understanding it's not about what you make, but what you keep. So from being self-employed that early, it was a blessing in disguise, getting annihilated with taxes. Prime Corporate started about 10 years ago, like I said, and that's where the focus was. We wanted to start a niche where startup entrepreneurs don't really have the resources to hire in-house counsel and in-house CPAs. How can we provide something that could help people understand how not to fall into the same mistakes that I made?
Yeah. So real quick, guys, this is a webinar I was excited to schedule. They actually flew out for this. For you guys that don't know, I'm Jesse Burrell, CEO of Batch Service. I do an amazing webinar every single month to just add value to our community and make sure that you guys are doing best practices in so many different ways. And no one ever talks about what we're going to be talking about today. And I think it's something that needs to get touched on more often because, you know, I know a lot of people on here are getting their first deal or have had a handful of deals, but as you start growing your real estate or entrepreneurial journey, doesn't necessarily have to be in real estate. You need to know the right things to do and the right people that are going to help you. So this is going to be a good one. Save your questions for the end because we're really going to dive into a bunch of stuff. And then I'm excited for you guys to start asking questions. But this is a really cool company. I got to meet them a while back and they've helped so many people. I want to make sure that you guys are, you know, put in a place to where you're working with good people that could actually help you, because there's a lot of people that will do some shady things or not understand how to do everything.
For sure. Yeah,
so
I appreciate that.
What we're going to cover is we're going to cover entity structure, tax planning, estate planning, and business credit. So let's dive into it, Tommy. We're going to start with entity structure. So entity structure, that's when should I get an LLC? Let's start there.
Sure. I love it. Yeah, that's when should I set up an entity is one of the most commonly asked questions that we get, right? Should I wait until I find my first property? Should I wait until I make money in the first year? But I truly believe that everyone in America should be self-employed to some extent, whether it's a side hustle, you're a full-blown entrepreneur. I joke that with my daughter, we're going to have a lemonade stand when she's like 5 and legitimize it as a business. But I joke about it half-heartedly because the tax code is set up for entrepreneurs, right? obviously you know this, when you have employees and when you have things that employees pay the taxes. Goes back to the Rich Dad, Poor Dad with Robert Kiyosaki. And when you're self-employed, you're able to take advantage of the tax code that people that work W-2 jobs don't have access to. So by setting up an entity from the very beginning, to answer your question, you're showing the intent with the IRS to treat and operate this as a business. So as soon as you have the idea, or as soon as you spend your first dollar, I truly believe it's beneficial to legitimize yourself and structure either an LLC or whatever entity is best for you from the very beginning.
Yeah, absolutely. And then make sure in the comments, guys, we're all about collaborating, squatting up. Make sure you say where you're from, where you're doing deals, so you guys could get to know each other a little bit better, and start doing deals together as we're talking through this. Make sure that you guys are having live conversations to where you can maybe buy or sell some deals from each other while we're on the webinar right now. So I want to dive in a little bit deeper to entity structure. Let's talk about, why should you get an LLC? Because you need to expense all your stuff. A lot of people don't understand expensing stuff. And then I don't want to get too far into it, but when should you also get an S corp? Because that's actually really important, because that's when the self-employment tax goes away and you're saving yourself, what is it, 10-12% now on top?
Yeah, it's a great question. So when you're first getting started, a lot of times we recommend starting with an LLC because it keeps things simple. It keeps it easy, right? It doesn't overcomplicate the process. And that's where a lot of people are concerned or want to wait until they do their first deal. But when you have the LLC from the very beginning,
start expensing.
You can show a loss 2 out of your first 5 years in business. Right. So even if no money's made in that first year, there's still benefit to having the LLC. Now, to your question about when is it time to switch to an S corp, or
let's explain what an S corp is as well. So I'm going to be talking about a lot of things, you guys, and if you don't know, ask questions or ask us to elaborate on those. What is an S corp? So explain that.
Yeah, so LLCs and S corporations are just different types of entities on how they're taxed. Fundamentally, they're very similar. You're just the same asset protection. You're electing a different tax election. Yep. Exactly.
So what that basically does, though, is it gets rid of your self-employment tax. So I have a great story. I think, and let me know if I'm wrong, but you should get elected as an S corp probably when you're making about 75 grand a year.
I usually say 50 to 100. 75 is perfect. At 50, that's when it's time to plan on changing that over.
So what that does is I didn't elect in time, and I think my first full year in real estate, I made about $130,000 after all my expenses, and I hadn't elected as an S corp, so I had to pay that self-employment tax on top of, and that cost me an additional $16,000. So I think I paid almost $40,000 in taxes of my 130, and I'd spent some, and I didn't know how much I was supposed to save, and basically all my savings of my first year to where I'm like, I could finally breathe, I have some money, it was gone. So if I would have had someone like you guys when I first got started, I mean, that would have saved me $17,000, and then I would have had the proper advice to set things up and say, this is what I want my future to look like. Having that is key, and luckily we got that soon after, but that was an expensive mistake that didn't have to be made, that I made. So to the people watching this, these people are here to help. They'll actually set up your LLCs for free. Now, it's not actually free. You have filing charges and state charges, but any other company is going to charge you a fee on top of those things. They just charge you the hard costs. So like, set a consultation after this meeting. That's why I set this webinar, was to have people not have the same things that happened to me, and you guys have a whole bunch of other services, because when you're in this real estate business or entrepreneur, let the professionals do the other stuff. You should be focusing on making money and growing your business. I don't do any of this stuff. Why should anybody else? No one does. Like, your job as the CEO or an entrepreneur is to do all the things you can to make money, not worry about your bookkeeping or your tax planning and all that. Obviously, you have to talk to you guys, but you shouldn't be in the weeds working on it.
100%. I agree. I mean, where is your time best spent, right? Your
Making
time.
money.
Yeah, exactly. So at the end of the day, if we can make sure that the other components are taken care of, the entity, you obviously would have to pay the state and the filing fees like he covered, but the consultation is free for that reason, right? We started this company with startup entrepreneurs and solo entrepreneurs in mind, to give them that guidance, to help them understand based off of where they're located, what type of business they're doing, what makes the most sense for their situation. And just to elaborate off what Jesse's saying with that S corporation, when you first have an LLC, you have until March 15th of the following year for the IRS to accept that tax code election change to an S corp. So you probably sat down with your accountant or your CPA and it was like, uh-oh, we're a little bit late. You made enough money where this made sense to make that change. And it allows you, once you change to that S corp election, you pay yourself either a salary or a distribution, and it allows you to avoid half of your self-employment tax. So Medicare, Social Security, but I mean 7-8% is right off the top, and then the additional deductions you're able to take while still paying that salary. It's the tax code's a game, right? It's 72,000 pages.
It's insane.
And if you don't understand how to play that game, you don't want to avoid taxes. You want to pay your fair share. You don't want to raise red flags, but if you can invest back into your own retirement, into your own business, or I often joke, throw it off a bridge. I don't care what you do with it, but give yourself that option. To make that decision.
Yeah. So long story short, even if you haven't done your first deal, you should get an LLC, because if, let's say, you decide not to do real estate, that same LLC could be for this new side hustle, and you could still be writing off expenses of all those different things. And even if you have another job, it helps offset, and you could get money back if you're taking losses on your companies as you're growing them. And a lot of people don't understand that you can have a job and have an LLC and still get tax savings. And I don't think a lot of people understand or know that. As you said at the very beginning, every single person in America should have an LLC for the simple fact. Everyone does something on the side in some way, shape, or form.
100%. You're putting time into it. You're showing that. And once again, going back to that, the IRS wants the intent to treat and operate as a business, right? So you've invested money, you've invested subscriptions. A lot of you have probably invested in coaching and education. Those are expenses that are deductible against your business. And if no income's made, LLCs and S corps work as flow-through entities. So it can flow through with the losses and the expenses that you've already made or are going to make regardless to help save money in taxes.
Yeah, for example, if let's say real estate doesn't work out for you, if you at least set up the LLC, you could show those losses and offset those against your taxes for the year. Like, you should always have one, especially if you're getting into anything. If you don't have one, go get one. I think Arizona filing's like $85, and then you need to set up a business checking account, which if you put where I'm at, Wells Fargo, $500, it's free as long as you keep a balance of $500 in there.
Yeah, a lot of them are $25, right? And we can certainly help navigate those waters. Every state is a little bit different, but at the end of the day, if you treat something like a hobby, it's going to cost you money like a hobby. Treat it like a business, reap the rewards of a business. You golf as a hobby, you operate this obviously as a business, and that's what everyone wants to do. That's what we want everyone to be able to do. Okay,
I think that's if someone has questions, we'll talk about some entity structure stuff later, but let's get into tax planning. So we kind of talked off camera a little bit. Like, what do you mean? Like, what's tax planning? What are you talking about?
I think two pieces of advice from a tax standpoint that I would give to anybody. One, have a system to track your expenses. I don't care if it's an Excel spreadsheet, if it's a free app on your phone. Some of you may even have bookkeepers at this point, but have something that holds you accountable to tracking business expenses. That's number one. Number two, hire a professional, right? Once again, going back to where's your time best spent, having a professional file your taxes is an outside perspective looking in. Blind spots are created throughout the year of what is and what is not tax deductible.
Right.
If you can keep more money in your corner by hiring a professional, if you spend $1,000 on a tax preparer and they save you $3,000,
right,
who's not taking that deal?
Right.
Right. So it helps you understand your situation. It makes sure that you're maximizing on your deductions. But from a tax planning standpoint, I truly believe that, once again, anyone that has taxable income, if it's W-2 and you go to work every day, or if you're making money in the real estate business, going into the fourth quarter especially, someone should sit you down and say, Jesse, listen, good job this year. You found a couple properties, you located some deals. Here's what your options look like. Your expenses total X, your income totals Y. Now, over the next 3 months, last quarter of the year, you either are going to pay $10,000 in the form of taxes, or you can invest that back into your business.
Right.
You can find and locate another property. If you're not planning going into the fourth quarter, the next year comes, and that's where everyone's like, oh, I better plan better next year, right? Next year, I'm not going to do this again. So
right.
That's what we want to avoid.
So I guess you guys have helped over 100,000 people. So what have you seen help real estate investors specifically, since that's what we're mainly talking to today, is going to be some sort of real estate investor watching this webinar? Sure.
So from a tax standpoint, this is for everybody. If there's any note takers out here, this one's for you. What the IRS is looking for, is it ordinary or necessary for your business, right? So if we were to go grab lunch after this, that's not necessary for us to do that, but it's an ordinary business expense.
Right.
And as long as you can tie it back to your business some way, somehow, a lot of times those are deductible expenses. So phone bills, internet bills, power bills, those of you that have the home offices, portions of your rent or your mortgage, right? Those are a lot of the standard deductions that most of you may or may not be aware of, I guess.
But even travel, when you're going, if you're networking and talking to people, there's a good chance that travel turns into some type of business experience as well.
100%. That's how we met, was at a real estate event.
Yep.
And obviously, when you're going and you're looking at properties, your research and development of different areas outside of your own, as long as you're tracking those expenses and you have a team that understands how to write those off, once again, you know, at the end of the day, a lot of things are business related. Coming out here to do this, all this is going to be business related for me from the second I leave my house. The Uber that I ordered to get to the airport until I get home, everything in between, I am here for business.
Exactly. What about, is any type of clothes a business expense?
Yeah, so apparel is a funny one.
Actually, that's a real question, because like I've heard conflicting things, and I don't know if I'm ever allowed to do it. So what type of clothes, I guess, would be go ahead, just answer.
You're like, I want to know. Are clothes deductible for me? A lot of times you are supposed to have a logo on there of some sort, but for YouTube University out there, some of you have probably seen people putting their logo on like the belt loop of their pants or the back collar of their shirts. So we want to do it the right way. Once again, we don't want to bend those rules. We might as well just play by them. Yeah. But if you're embroidering your business, I should have wore a Prime Corporate Services shirt. This batch hat, right? This absolutely is a deductible expense here. So as long as it has your logo on there, as long as you're using it for promotion of your business, there's ways to make those deductible. Apparel is actually a way that we help a lot of clients start building business credit and corporate funding. I know I'm jumping the gun here, but it's an easy way to be able to represent your brand, represent your business. Those of you that are, you know, knocking doors, cruising through areas, a lot of that's deductible expense.
So for tax planning, I wanted to bring up one more thing. It's something that I've really enjoyed doing, or I've seen a lot of it on TikTok, which I found out about this 5 years ago and have done it ever since I found out. But Section 179 and being able to deduct your car as a work vehicle. So I know it has to be 6,000 pounds weighted, so that doesn't even have to be curb weight. And then you're able to deduct up to 100% of that car. And you don't even have to own it free and clear or anything. Do you want to kind of elaborate on the right way to explain this?
Yep, absolutely. The tax code has got a lot of gray area. Let's start there, right? There's a lot of times the hard thing about taxes is there's no right or wrong. Section 179 allows you, once again, you search on YouTube University, going back to it, you don't have to go buy a G-Wagon or you don't have to go buy a new Tesla in order to take advantage of deductible expenses with a vehicle. But that 6,000 pound weight, there are ways you can 100% deduct that in the first year. Now, if you don't have the G-Wagon, you don't have the Range Rover, the 6,000 pound car.
All the trucks, and there's a lot of different things that...
Even for a
it doesn't
Honda
have to
Civic,
be brand new either.
You can go mileage deduction. You can go Section 179 weight deduction. At the end of the day, a vehicle is needed oftentimes for a real estate business or a real estate entrepreneur.
Yeah.
So if it's not 6,000 pounds, there's other ways that we can oftentimes itemize that vehicle or write off the mileage to help save real estate entrepreneurs a lot of money in taxes. That was one of the biggest areas this year that our CPAs saw benefit for the real estate investors was vehicle expenses and those deductions.
Yeah, so you parents that have those vans, you can deduct those. That could be that real estate work vehicle.
Hey, minivans are smooth.
They sure are. Yeah, I just wanted to touch on Section 179 because that is, I think I have 3 cars, but I've always had to get a more expensive car because you have to recapture that depreciation. So if you don't get another car that is that, you will have to pay some money back that following year.
For sure. And how much are you using it, right?
Yeah.
How much are you using the vehicle based off the mileage?
Yeah.
I can't tell you how often people say, does it make more sense to lease or does it make more sense to own? It's more of a financial question. It really is. It depends on how long you're going to keep that vehicle. It depends on how you're going to deduct that expense. But depending on your income level, usually I do see better deductions from an owning standpoint.
It is from an owning, but it depends where you're at in that business too. If you're able to write off in your first or second year of doing starting a business, not necessarily real estate, you may not want to take that deduction that year. You want it to be a good year where you made a lot of money and you have to find ways to deduct stuff. And you don't even it doesn't have to be a new car either, right? Or that you bought that year. Can it be a car that you've already owned?
Yeah, for sure.
So that's what I'm saying is there's all these little things is, my dad started getting into real estate and had a couple good years. And last year he didn't have a good year, got a new car. And he's like, I'm just going to wait till next year to use this deduction because it's not really going to help me. And it's going to help pull down taxes a lot further if I do it this way and potentially put me in a different bracket.
And some of you that are, maybe you have no taxable income. Maybe you don't have a job. Maybe you don't have anything that you're filing taxes on. It's kind of the same thought. You can always file those as a loss and carry them forward to the following year. But it goes back to your dad has a professional that lays it out, I'm sure, and says, here's what it would look like this year. Here's what it would look like depending on what your income is next year.
Right.
And there's so many what ifs in the game of tax that the more you understand about your situation, the easier it is to make expenses and make decisions around how you're spending your money. Right?
Yeah. All right, because I know business credit's going to be a big one. I already see a couple questions up there. Let's go and start talking about trusts.
Sure.
Or on estate planning, I guess.
Let me one more thought with taxes before we move on. I want to give everyone this. An easy way to really look at additional tax deductions as well is what are the tax code changes that are happening this year? Taxes are meant to impact behavior, right? So when COVID hit, they say restaurants are impacted and business meals went from 50% deductible
100.
to 100. Exactly. And so that's a recent change for last year and this year that there are always new changes. Every year they come out with new tax code changes. Make sure that you have people making you aware of them. And if they benefit you, take advantage of those.
That's why I think it's funny when people, especially the ultra rich, they're like, oh, they're doing all these things to save all these money. But the IRS is the one that puts this game in play to have them do these behaviors. They're pushing them to want to go to one sector or another, or opportunity zones, and they're going to get all these savings. Rich people are just, I'm talking the real rich people, they're doing what the government's telling them to do because they're pushing them one way or other on where they're going to be able to offset some of their taxes. So I think some people misconceptualize that sometimes because it's the government that's putting the behavior in front of them, saying this is how we want you to act and where we want you to drive money into our economy.
Yep. Play by the game. The rules are there, and a lot of them are set up for entrepreneurs. Might as well just play the game.
But that's what all the professionals and people like you guys do, and the accountants that I work with and all the type of things that we're working on is it's just a game. Make sure you're playing it with good people, or else, as I said, I had that one year that lost me $17,000. I've heard of way worse stories of bad accountant, people going to jail for accountants doing stuff that they're like, oh, we saved all this money for you, but they did literally illegal stuff for these people.
Yep. Yeah, we have a mutual friend that missed out on $600,000 of savings before we were introduced. I'll tell you that story after this, but it's there's a lot of area of opportunity, and it's like building a house, right? You're not going to build a house on the sand. The reason I am so passionate about entities and taxes, it's not the most exciting thing in the world. This is not the most exciting webinar that you are going to do. I'm fully aware, but
it's important.
It is important, and if you could build it off that proper foundation from the beginning, oftentimes it puts you in a much better position to succeed and scale as you grow your business, obviously.
So we talked about entity structure. We talked about tax planning. This is great when you're getting started. But let's talk about estate planning, because that does cost a little bit more money. When is a time when you should start doing that, or should you do it? I personally don't think you should do it right when you get started, because you need money to fund your business. If you have a different opinion,
I agree.
I'd love to hear that. But once you do start making a little bit there, and you do own a handful of assets, I think it's time quickly to do that. And I wish I would have done that sooner. Nothing's ever happened to me, but having that buttoned up for your family, for your friends, for your own protection in case something does happen, for all the hard work you put in. Let's go into estate planning and dive in, because I know a little bit more about entity structure and tax planning, but estate, I'm still just scratching the surface myself personally.
Sure. No, it makes sense. And I think everything that you do, to your point, should be done at a pace that you're comfortable with. Crawl before you walk and walk before you run. But once again, the more that you understand this before you need it, the easier it is to work and grow and get to where you want to be. It's not about where you are now. It's where you're going to be in 3 years, 5 years, 10 years, right? So with that being said, everyone watching this, go on Google and search, what does it take to avoid probate in the state that you're located in, right? For me, what does it take to avoid probate in Utah? For you, Arizona, wherever you're located, most of you are going to see living trust.
Yep.
Right? A lot of people say, oh, I have a will. That's great. A will is better than nothing. But a trust is not just about the death benefit of when you pass, to make sure the assets and the legacy you've worked so hard for goes to who you want it to go to, right? Friends, family, neighbors. We've had clients that have just wanted to make sure their dog was in a comfortable dog hotel, right? There's all sorts of different people and areas that people want to put their money, but trust, will, living will, power of attorney. They all have different components. They all benefit you in different ways. If push comes to shove, if you own real estate, it's probably smart to have a trust in place, but it all depends on your risk factor, right? A lot of people that are younger say, oh, I'm not ready for that yet. I don't need that yet. It's not just about the death benefit. There's a lot of ways that you can protect yourself and protect your assets from the beginning as well.
So how is it protecting yourself and your assets? Can you kind of elaborate on that a little bit further?
Yeah, for sure. So one of the things that we do for a lot of real estate investors is holding companies, Delaware, Nevada, Wyoming. they all have additional privacy and protection laws that other states don't offer. So a lot of that just comes from a privacy standpoint, right? If someone searches the entity that I have that owns real estate investments, I don't want them to see my name and my address where my wife and my daughter live, right? A lot of people want that privacy and they want that protection. Entities can accomplish that. Holding companies can accomplish that. Trusts and wills are one more way to leverage having additional privacy for your business and just for your sanity sleeping at night, depending on the level that you're at, right?
Okay. Is there anything else you wanted to touch on for estate planning? Because I know we really wanted to get into business credit because that could be super helpful for people just getting in to start building credit, and also people that just haven't used it and have established businesses.
Yeah, for sure. I guess just a final thought with the estate planning before we jump into business credit. Your structure's a living, breathing organism, right? It's constantly changing. So if you already have a trust and a will, when was the last time it was updated? It
should be yearly, I think.
I think depending on how much business you're doing, yearly is great, but sometimes it could be every 3 to 5 years. Some people that aren't doing a lot or don't have a lot of changes, even every 5 to 10 years, but usually our attorneys will recommend every 3 to 5 years you go in, we review it, you understand it, and you make the changes necessary. So it's constantly changing.
All right, so the favorite part of the show, definitely let's start talking about, business credit, leveraging it, being able to get transactional lending out of it, or just helping to grow your business. I know this is a big thing that Pace Morby's been talking about, and you guys have done a lot of business with him, but let's really dive into this business credit thing that has all the buzz right now.
Yeah, I mean, Pace, Jameel, Brent, all those, shout out all those guys. They're all a bunch of legends. Business credit and corporate funding. In the 10 years I've been doing this, I'm yet to have an entrepreneur call me back and say, Tommy, I wish I didn't build additional business credit, right? Having additional capital for my business, this sucks, right? No one said that.
Right.
So the way that I like to lay out business credit, everyone has a legal name, everyone has a social security number, everyone has a credit score.
Right.
We want to do the same thing for your business.
Right.
Name it. Make sure you have the EIN number. Build a separate credit profile for your business, right? So this looks a lot of different ways. Building business credit is very similar to building personal credit. It's not rocket science. It's a process.
Right.
Right? And if someone when you were 16 years old said, I'm going to make sure you have an 800 by the time you're 21 years old, that would have made your life quite a bit easier.
Sure would.
Same thing with business.
Yeah.
It's easier to do that from the beginning to build and grow and scale your business credit where interest rates are lower. A lot of times credit lines are easier to get larger lines of credit. But as you build business credit, use the business credit to invest into your business. Let the business pay for itself and then pay yourself from there.
Right.
Simple. Keep yourself organized from a tax standpoint, grow and scale your business, and pay yourself from there.
Yeah, and then I'll have someone from the team. But as I said, anyone that joins this webinar have a free consultation with you guys. So one of you guys, throw the link in there. And if you guys have any questions, it's completely free. But all the stuff that we're talking about is all products that you guys offer. And I've vetted a lot of companies that are like you. And you guys are the ones that have worked with over 100,000 people and do it the right way. And I know you're the CEO, Steve, and just how you guys do business is obviously there's a price for everything, but the value that you guys add and the type of care that you give to your clients is crazy. So if you guys have any questions as we keep going, you could sign up for your free consultation. I'm sure they could get in contact with you guys next week.
For sure. Yeah, we're happy. We're here to help. At the end of the day, that's what it's all about, and that's what this company was built off of. The consultation is free. If you already have an entity and you want it reviewed and you want to make sure operating agreement is structured properly, we're happy to do that. If you need an entity, discounted rates, like you said, where you'll still pay the state and the filing fees, but it's not like you have to go to an attorney and pay $1,500 to have that all legally prepared either.
Right.
If you're interested in business credit, if you need help with tax planning and tax prep, estate planning, at the end of the day, like I said, we're here to help. So feel free, take advantage. It's a free consultation, and that's what we're here for.
Yeah, so let's keep diving into. I just wanted to make sure. I always forget to, like, how can people get a hold of my guests? I'm horrible at doing that. So I was like, I'm gonna do this early. I'll obviously do it again at the end. Make sure that we have the link for everyone. And this is recorded. We'll send it out to everyone that registered, and then we'll also have it on our YouTube channel. But let's dive further into this business credit. You explained how it was, why you should do it. But, like, what are the things that you could do once you have the business credit? And I guess if someone was to call and ask you saying, hey, I want to start doing this, what are the real benefits that they're going to get out of it?
Love it. Yeah. So with business credit, it's a tricky one. I always want to under promise and over deliver on business credit because, as I mentioned, it's not rocket science. It's a process. So it does take a little bit of time. Usually in the first 3 to 4 months, we want to establish a credit profile enough by getting maybe a Lowe's card, maybe getting a Uline card, or like I mentioned earlier, getting some apparel for your business so that we can build up and inflate that credit profile enough to where now you can go get some business credit cards.
Yep.
And you can get some 0% interest rates for 12 months or 24 months. Invest back into softwares, invest into leads, invest into whatever you need from a business standpoint.
Right.
But over time, that way you can eventually get to where you can get actual lines of credit where the liability is separated. Personal is personal, business is business.
Right.
The more you can separate those two legally and financially, peace of mind, a lot easier to grow and scale.
And then once you get those lines of credit, that's when, a lot of people have been talking about using those lines. If you're not tapping that into your own business, that's when you could go use that for transactional lending, or that's when you could go do that to lend some money for a project on a fix and flip. So you could arbitrage. We do this in our personal business, not with lines of credit, but actually I do with my home equity lines of credit, my
Sure.
HELOCs. So I have a HELOC on my personal house. I pull that line for 4%, and I go lend it to a friend that needs to flip a home for 10%, and I'm making 6% off of dead money or just equity in my house. So I have lines of credit on every single property that I have, and I go lend those out because that's literally equity. That's money in my houses or my properties that is useless.
Yep.
And I could go arbitrage that, and that's basically the same thing that what you guys are talking about. If you don't need to use that business line or you don't need all of it and you're very profitable, that's another way that you could use to make additional income that's cash flowing for you.
Yep, for sure. Yeah, easiest time to look for money is when you don't need it.
Right.
It's like looking for a job when you already have one, right? But I 100% agree with the message that you just said. I don't care if you have $1 million in your checking account or $1 in your checking account. Having additional funding and having additional capital resources, whether it's personal or business, as long as you're responsibly making those decisions, like you're saying, of a 6% earnings, it's a no-brainer. Write off the interest, make the 6%, let your money work for you. Sounds like something the wealthy do. Leverage, let the money work for you.
Yeah. I guess what other reasons? I think the biggest reason too is just having it. Your business isn't always going to be perfect. You may want to invest into something and having a much smaller interest rate than a credit card. Let's say you're going to do a CRM overhaul, or that those could cost $10, $20, $30, $50,000. That's where you could tap into that, still have the money that you need for all your normal operations.
Yep.
And then hopefully with what you're doing, it's going to create a bigger ROI on. I mean, if you're investing into something in your business, it better serve to make you more money.
I mean, just as an example, I have a lot of very successful clients that just strictly do Airbnb, and oftentimes they'll use their business credit and the corporate funding for furniture and for the games, the air hockey, all the different things that go into establishing an Airbnb from the very beginning.
Right.
If it's on a 0% and you can let that profit work for itself, you're deducting it, the liability's separate. I was telling you this as well before, but like I'm okay with my business credit looking like a roller coaster because I'm borrowing money to generate money.
Right.
I don't want my personal credit looking like a roller coaster because my wife would kill me. But separate those two, and it's a great way to be able to grow and scale on a business side.
And that's something that I've learned as well is we were buying and selling so many houses, and I was buying new cars, selling cars, doing a lot of stuff personally. And I learned to put those all into my businesses so it stopped affecting my personal credit. Like I was on time with everything, and it's not like it got low, but it'd get down to like a 720. I'm like, what the heck? Like my lines are increasing, everything. It's because I'm doing so many transactional things. The credit bureau is like consistency.
Yep.
And when you're doing all this crazy stuff, I was like, what the hell? And then I finally talked to someone like, yeah, you need to stop doing all this. Like you're buying, you're selling, you have a loan, you don't have a loan. Now you just got another loan. And when you drop off loans or add loans, it takes a hit either way.
Yep.
Even when like I paid off a car and it hit my credit, I was like, what? I was like, that's crazy.
Paying off loans it's definitely it hurts your credit, which is so ridiculous. Building good credit is so difficult to do. Ruining your credit is so easy to do. It's one more way to just keep those two separate to make sure that you're protected.
And
at
then
the end of the day, that's the goal.
I think that kind of gives a good overview of everything. Now I really want to do some Q&A for the next 20 minutes. So if you guys do have questions, I think I only have like 4 or 5 in the Q&A, but put them in the Q&A because I can't go through the chat because it's hundreds and hundreds of comments. But thank you guys for all working together, saying where you're from, doing all those things. But make sure, put them in the Q&A. So I'm going to do a couple here. Does PCS only work with real estate investors, or do they work with other types of businesses? I could answer this, but you can too. The answer is yes.
Yeah, any type of business, really. We try and stay away from farming, but online businesses, network marketing, we really are happy to talk to you regardless of what you're doing or regardless of your situation. But we work with all sorts of different types of businesses currently.
Awesome. Another one. Sorry, I have to look on the screen over here, so I'm going to be squinting. What?
Need to get your eyes checked.
What is a business line of credit? And then, so we kind of just talked about what a business line of credit is and benefits, and how do you get started building it with the new LLC. So how would they get started building, like someone with a brand new LLC? What first steps would they take?
Yeah, a lot of times the first thing that we want to do is we want to look at making sure that all the documentation on the LLC or the corporation's in line first, set up that separate business bank account, and then go and get our DUNS number or through Dun & Bradstreet to start the process on starter accounts, getting into the secondary line of funding, and then lines of credit from there. So proper entity setup, make sure the documents are in order, open up a separate business checking account are the first 3 steps.
Let me bring up the Q&A again here. So just open up with PCS. Do you want to read this right here? If you could read it. Read it out loud.
Yep, just opened up with PCS. Do you open up a line of credit with the S Corp holding company or with the LLC? Also, which mailing address do we use? My EIN and certificate of formation have different addresses listed on the LLC. Great question, anonymous attendee. Love that you're already working with us. That's amazing. Oftentimes when you're building business credit, sounds like we have a real estate investor that cares a lot about the privacy, from the name to the protection with the holding company. They don't want that name listed, which I love and respect, right? But oftentimes I say build the business credit off of the holding company if you structured yourself that way. Because the subsidiary LLCs, if you have a real estate LLC and you have an online business, that way you're putting yourself in a position where the holding company can lend money to the subsidiaries, and then you can pay yourself back from there.
Gotcha.
It's better to build one large line of credit
Then a bunch of small ones.
Then a bunch of small ones. Yep, you got it. So that's what I would recommend there. And then for the mailing address, keep that registered agent off as much as possible. That's for the physical address and for your privacy. The registered agent we don't want to use for mailing or anything like that if we don't have to.
Gotcha. You want to read that top one?
Yep. I may have missed it, but what are your thoughts on each property having their own LLC?
That's a good one.
That is great. This is a controversy. Yes. So I'm going to start with this disclaimer on this one.
Can I start with my opinion before you give your professional opinion? So in my true opinion, there should be a holding company, and then below that, all the properties should be in an LLC and all funneled to the holding company. That's how I've always done things. So
if you ask 100 attorneys this question, you are going to get 100 different variations of this answer. I'm telling you because I've done it. So when you have the holding company, that's working as privacy and as protection, right? One thing that I tell people is depending on what you're doing with the deal, depending on where you live, depending on the equity you have within the property, and depending on what your risk is as an individual, some people are so much more risk averse than others.
Yeah.
All of those play a factor. So if you have some properties that you're using for B&B or short-term income, you want to separate those from long-term or passive income because one, the liabilities are different, and two, the tax rates are different. So depending on the equity, we usually will say 3 to 5 doors within an LLC is probably okay.
Got it.
But I'm not putting a property that's paid off in the same LLC with one that has $10,000 in equity because I don't want those to be commingled or affected. But if I've got 3 properties with very minimal equity, I personally would be okay throwing those in the same to save some money.
Interesting. I learn something new every day. That does make sense. If you have something paid off worth over $1 million and then something that has barely any equity, you don't want to commingle those.
Yep, for sure. But a lot of people will put every single property in a different LLC.
It's just more tax.
They want the protection. It's more, but it's to each their own on that question is what I've learned. You have to weigh the risk of what makes sense to you, and that's why we're here. Based off your situation, we could help you understand what's best.
Yeah, and then I think this is a good one right here from Young Hustler.
Young Hustler, does business credit involve or require your personal credit at first to build it out? This is a great question. There's ways to do it without it. So whether you have no credit, bad credit, fair, good, great, there's ways to build business credit. Now it may take longer. It may, it just takes longer if that's the way to do it. Even when you're first building business credit, if you lean on your personal credit and you have good personal credit, it's easier to build that credit profile for your business. But we have an excellent team of credit advisors. They've been in the banking industry for 40 years, one of them. So a lot of relationships there and a lot of ways that you can build it regardless of your situation.
That one right there from him as well.
Did he say elect the tax as an S corp by March of the following year you establish? So yes, right now we're in 2022. If I set up an LLC today, I have until March 15th, 2023 for that to be accepted by the IRS.
Gotcha.
So ideally speaking, at least try and get that submitted before the end of the year so you're not flirting with the timelines of the IRS, but as long as it's accepted before March 15th, it qualifies for the whole previous year.
And then I could answer this one. Roderick, do you need a business checking account tied to your LLC to write things off? And the answer is no, but it's going to be much more easy for your accountant to track everything if you have your LLC business account. It's that simple. Like the less organized you are, the more you're going to pay your accountant.
Yep.
Like there's no ifs, ands, or buts about it. As long as you have $500 in that account, or some are even smaller, but always have everything organized. Run all your expenses through that one business checking account or credit card and make sure the business pays off that credit card. It's pretty simple stuff, but you can do it the other way, but then you're having to keep track of everything in an Excel spreadsheet and it becomes cumbersome to you or whoever's trying to dig up and find stuff. And then I feel like you always miss stuff and miss expenses that way. So it's not that hard. It takes 20 minutes to go do it. I've done it a million times. I have like 40 of them. Just do it. I think people think it's a bigger deal than it is to set something up. It's really simple. It's just like going getting a personal thing. They're going to ask what type of business you're doing. This is what you say. and they're gonna set you up. It's easy breezy. It's good stuff.
If you're not doing that, you still can make them deductible. But I 100% agree with what you said. Why wouldn't you want to know what your profit and loss is, and why wouldn't you want to stay more organized to make it easier at the end of the year? That's our goal, is to give you the protection, the privacy. But when we were talking about tax, those are my 2 recommendations. Have a system to keep yourself organized, and hire a professional to file your taxes.
I think this one was from Josh, and he's asking something similar.
I set up my LLC through PCS and need to set up my banking account. I set it up in Wyoming, have an agent address there. I'm in Ohio. What address do I use to set up banking? If mail gets sent to the Wyoming address, will it get forwarded to me?
Yeah, just forward it.
Yeah, the registered agent is supposed to forward those, but for your mailing address, always use your personal address. The registered agent, once again, it is there for privacy and for protection, but it is not the most reliable. It's not USPS. It's a registered agent. Try and use your address for the mailing address as much as possible. I can't tell you how many times things have gotten lost, or they want to charge $15 to forward them. We have it to make sure that you have privacy and protection. So, Josh, as well as if we did it for you, within your documents, you should have a resolution document that'll make it easy to open that bank account for you as well. From Lori, on Wyoming entity, do I set up a virtual office for mail and credibility in my state of Georgia? You can, you don't have to. That's a personal preference of where you want to accept your mail.
And then, they're asking something right there, so we go down to this one.
Dominique is wondering, if you only use your business account for all business transactions, will a bank statement work for your taxes? Absolutely.
Heck yeah.
Easy enough. Credit card statements as well. I mean, credit cards are so awesome now, where 1, you get the rewards. 2, the end of year statements and the way it breaks all the expenses up for you.
Yep.
If you're keeping all your business related expenses on one account, like we were talking about in the previous question, so much easier to make sure you're not overpaying.
I think Frank had a question here.
Frank's wondering, how is your business credit limit determined when your LLC is new? This is a great question, and this is one, once again, where I've got to under promise and over deliver. But right now we're getting over, it's usually between $2 and $3 million a month in business credit for our clients right now. So it totally depends on the time of year, the person, the personal credit. And as we build the business credit, sometimes people start out with $1,000, $5,000, $20,000. Sometimes we see people with $100,000 right out of the gate.
But that's what the consultation's for.
Yeah, it totally varies.
Yeah,
it varies all the time for sure.
And then Cody, before starting your LLC, should the holding company be in place first? Yes, it has to be, because then it has to own that other LLC. So the holding company does have to be in place first. I've had to redo and restructure LLCs a few times, and it's a huge pain in the butt.
It's easier to do it right from the start.
Yep.
Right? How bad do you wish you were watching this when you were first getting started? It's because when you set up an entity, it works like a birth certificate. You can't change it. You can amend it, and you can change your name, for instance, right? I could change my name. But it's like a birth certificate. It's always going to live there, so it's a lot easier to set it up properly from the beginning.
Okay, we only have time for a few more, so I want to do a few more ones that I really think will be valuable to everyone. Can I transfer an existing LLC into a holding company LLC? You sure can. If that's what ends up being your holding company, now that LLC is just going to own the new entities that you put underneath it. So you can absolutely do that.
Yep, you can. Let's make sure that you have the privacy and the protection, but those are things that are doable for sure.
This is a good one.
My EIN and article of formation have 2 different addresses listed. Is that all right? It is all right, as long as you know the addresses. That is totally okay, as long as you know, because usually when you do that, you're going to have a physical address and a mailing address. So Mary, I'm assuming that's what happened in that situation.
And then Mary has a great next question. Any specific business credit cards you recommend? I personally like something that gives you true cash back that's unlimited. So there is Capital One that has, I think it's a Spark card that has 2%. I think that's a great one, and you could get access to that pretty easily. My limit couldn't get as big as I want, so I have an Amex that I think only gives me 1.5%. I don't know why we did that, but that was Annie, my business partner that does the finance side of things. There was some rhyme or reason, but it was so much bigger of a line of credit that we got with Amex. We had to keep recharging our credit cards, and I think she just got sick of having to pay them off like 4 times a month.
Everyone has a good card to a certain extent, right? There's, the American Express has got great options. Chase has got a lot of phenomenal options. Capital One, I love that Spark card as well. The 2% is amazing, but my recommendation would be make sure it's with the business, the EIN, and the Paydex score, the business credit profile, as opposed to tied and personally guaranteed to you.
Oh, this is a really good one. Let's have this be our last question of the day.
When dealing with net 30 accounts, how accurate should addresses be? I think that whenever you're doing anything business related, you should try and have it as accurate as possible. But to Mary's point earlier, if you have a mailing address and a billing address and a physical address that all vary, it isn't going to make or break or deny it. A lot of times just keeping it uniform and having physical mailing and billing being the same, that's all that really matters.
And then Landry or whoever's on this, make sure to drop the link to get the free consultation. Look at everything that Tommy truly knows. And they have teams of hundreds of people working for you guys that are here to help you. That's why I know this isn't the most exciting webinar. Actually, I think it's really exciting because I get to learn stuff. I know it's not going to help, you make more money in your business, but it's going to help you save more money in your business. And that's what a lot of people don't talk about. For you guys that are getting deals, or the people that are really going to stick around, that are just starting, that are going to start making that life-changing money, do this first. Learn from me. I made those mistakes. That's why I wanted you guys on so badly, was because I went through that, and you worked so hard for this money, and if you set something up wrong, literally, I was basically in tears, I have to give all this money to the government. I was thankful that I had such a great year. But man, an extra 20 grand for me when I just started, that was a new car for me to get 10 years ago. So just do it the right way. These guys are the best in the industry. And before we go, last thoughts that you want to give to the audience.
I appreciate it. Thank you for having me. This is great. This is
Absolutely.
Awesome. Next time we're golfing.
I'm okay with that.
As far as closing thoughts, I think just, it sounds cliche, but think bigger, right? When you're setting this up, set it up to where you truly want to grow and you truly want to scale. A lot of people have vision boards with the cars, the vacations, the vehicles, the nice houses, and throw this on your vision board. What's your business going to look like? What's your structure going to look like? We don't have to set it all up at once. Crawl before you walk before you run, but have the vision of where you're going. It's a lot easier to get there if how you're structured is part of that vision. So structure the business for the one that you want, not the one that you have. That would be my final takeaway.
Awesome. And I appreciate it, guys. And thank you for joining another monthly webinar. I'll have another amazing one next month in June. Until next time, let's get it.